China's been progressively cutting interest rates, and it looks like they've done it again. But I don't think that this will create the boom, at least in the stock market, that you would see that a rate cut here in North America would do. And so let's dive into this and let's see exactly what's going on. So, guys, as you smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. Now let's get right into this, and really it's a tale of two different economies. In China, you see them progressively lowering rates, whereas in North America, we've paused right now in the US, but I think they suggested that they're going to continue to increase at least two more times this year. And so it really is a difference in these two economies. And so let's take a look at exactly what's happening in China. So you can see that they have cut their borrowing rates again, and effectively the Wall Street Journal says in a bid to juice the recovery. And however, the way that the economy has been struggling, there are economists who are saying that more drastic measures may be needed, and they go on and list some in the article, which I found very interesting. And before we get into the qualitative analysis, I just wanted to show you guys a chart of what they've been doing. So notice that, this is 2022. So notice that pretty much in 2022 and then into 2023, they've just been reducing rates, whereas of course it's been the opposite in North America. And so, the Chinese banks recently did trim benchmark rates on loans to households and businesses. And of course, this is to hopefully surge growth or allow an environment where there would be more investment. But we'll see if that actually happens, because once again, the thing that I've been pointing out and the major risks that I've been talking about is that if North America slows, what happens to China if they are the factory of the world? And you very clearly are seeing that these headwinds are impacting the economy. Now, Chinese Premier Li Qiang, you guys may have seen me speak about him previously on the channel. He came out and just said that the government is studying a package of policy measures to promote sustained economic growth. So it sounds like they're not done. And he said that the external environment is becoming more complex and severe, and the slowdown in global trade and investment will directly affect the recovery process of our country's economy. And so that goes right back to what I was saying, at least late last year, maybe even early mid last year, where, just because the country comes out of its zero COVID lockdown policies doesn't necessarily mean that there's a surge in recovery. Although we expected somewhat of a surge, of course, there'd be an increase in domestic consumption. But the problem is that you're coming up against a massive headwind where if China's a factory of the world and the world is slowing down, how much of that headwind impacts the economy overall? And you're starting to hear them speak about it. I mean, I'm sure they've been speaking about it many times over the last couple of years, and I've been talking about it a little bit as well, but you can start seeing it become more and more a part of regular everyday conversation. The economy is slowing down, global trade is slowing down, but this is one of those slow moving type recession things where everybody thought that we'd see the recession in North America by now, and very well we might be in it, but it's really hard to see. It's never really come. We actually thought we'd see it in 2022 by all as far as I was concerned, but we didn't see it in 2022. So we thought we'd see it in 2023. We haven't seen it yet in 2023. And so, when does this recession come? Who knows? I'm still investing my portfolio the same way that I always do, which is on a individual company specific level. If there's an opportunity there is an opportunity there. But one of the things we have to pay attention to is how does this global slowdown continue to impact China, and what does China do to sort of address it? Because you got to be very careful with these policy measures where if you start throwing too much money into the economy, do you create an environment for inflation or stagflation in the country? Now, the other issue that they're facing, of course, is with the economy slowing down, there will start to be a creep up of unemployment, which of course could create other challenges in the economy. Do they even have the social safety nets to address those challenges? And so let's see how this plays out. And you can see Alibaba's share price is reacting accordingly. Now, this is why I would say, I don't know when it was, maybe it was a year and a half ago or whatever, but I I was selling cash secured puts on this name with a net purchase price of $70. And the reason why I was doing that is because I was really focusing on the downside. Because, I mentioned at the time that, you never know what's going to happen in the future with China. And there were a lot of bull cases, but there's a lot of challenges in the economy as well. The one thing that we haven't mentioned yet is the challenging property sector, which I did a 4-part series on, which I'll try and link at the end of this video. But, if you're going to try to increase the growth in the economy, can you do it by getting people to buy houses in this environment? I don't think you do, even with lower rates. And that's because the price of homes in the country are very high. And when you have unemployment increasing, you have less confidence in the economy overall. And I think that becomes a challenge for the country. How do they get out of this slump? And so the Wall Street Journal goes on to say that, some of the special measures that they will do is issue bonds to fund new infrastructure investment, as well as looser rules to encourage people to buy more than one home. Now, here's the problem with this comment. China has or the leadership in China has very clearly stated that homes are for living and not for speculating. So if you're creating looser rules to encourage people to buy more than one home, you're going away from that perspective. You're asking people to speculate on the real estate market. I don't know if that's quality growth that you're looking for. So be very careful when you are trying to push people to speculate on the real estate market. I think it kicks the can down the road and it creates a larger bubble. Economists are also saying that they should consider stronger tax cuts in other forms of financial support to help struggling small and mid-sized businesses, as well as vouchers or similar measures to finance household consumption. Now, here's the thing about the vouchers. I thought that these were going to come out, or they might have been announced as soon as the lockdowns were closed. In any event, it could have just been a way to give some goodwill to the people, because they were very upset with the government because of the length of the lockdowns in China. I think they were locked down for about 2 years, which is kind of crazy. I mean, you locked down a couple of Canadians for, I don't know, say like a year, and they started rioting with the trucker riots. And so I can only imagine how angry people here would be if they were locked down for 2 years straight. I mean, in some areas they tried it, but they just couldn't succeed down here. But the point that I was trying to make here is that I thought that they were going to give out vouchers, but they never actually did. And this is something that China has done before. And so my question is, why not now? This is the right time, especially for those people who are a struggler on the lower economic spectrum. And so this might be a good way to increase domestic consumption. I would think, at least it's better vouchers than creating infrastructure investments for infrastructure that the company may not necessarily need. Like, China is known for creating infrastructure well ahead of when they need them, but sometimes these infrastructure projects just lay waste. And so probably better to allow the individuals in the economy to determine how they want to deploy capital by increasing the amount of consumption by providing vouchers to those that most need it in this environment. And so, we'll see if this happens. I just see this as a good idea, but, can it create an episode of inflation? Of course it could. But because the country is reducing rates, it doesn't seem like it's in a position where it's too concerned about inflation at the moment. So it might not necessarily be a bad idea. And so with that, I was reading the South China Morning Post, and I saw 6 takeaways from the economic data as of the end of May, which I did want to share with you guys to sort of give you an idea and a taste of what the economy is looking like in China year to date thus far. And the big item really is that the jobless rate continues to increase amongst the youth. And the crazy part there is that back in 2022, I really thought that we were at the top end there. I didn't think that we would reconnect with the lockdown-related unemployment number of 20% again, and notice that we've just surged past it in 2023. So this is crazy considering that there isn't a lockdown now. I would suggest that you potentially have a real ticking time bomb here, because if you have all these students that are leaving school and they're unable to find jobs, that's going to surge this number. And that's been a risk that a lot of economists have been worried about and speaking about. And so although they're trying to play down the risk here in this comment, I would say that that's fine, but the fact that this number has been increasing over the last 4 years suggests that you have a bigger issue here. And as more and more people leave school, does this number continue to tick upwards? I would say it does, especially in an environment where global consumption is declining, and thus work in China is declining as a result. And the surge of retail sales that we saw post reopening in China. Remember, Alibaba on their Q1 conference call did say that post reopening, they did see a surge in consumption. Well, now you're starting to see it on a downward decline. And so it's still a high rate. I mean, year over year, you're looking at 12.7%. However, it did fall short of the 18.4% in April. So the question is, does this go back up or does it continue to decline? Because if it continues to decline, we're in trouble here. Notice how 2018, 2019, 2020, we got really comfortable to 10% year over year China monthly retail sales growth. So if we start dipping under that 10% rate, which we are close to doing so in May after a complete reopening, then we have another issue on our hands. And so this is I think if there's any number that you should be focusing on, retail sales number domestically is the number that you should be focusing on. It should be an area that is continuing to produce growth, and if it isn't, then we have another challenge here. And so I will say, however, that all of these numbers are running way ahead of how I've been forecasting growth of the Chinese economy. I've been forecasting overall growth at around 5 to 6%. And so if retail sales growth continues to decline, but it remains above 6% for the year, I would consider that a win. Now, the third point is that industrial output is easing. The level of output is still consistent with relatively subdued growth in goods demand and not cause for much celebration at the moment. And this is something you guys already know. Investments have suffered a broad-based decline. Now, what are those investments? Well, you would probably classify it in two buckets. So you have industrial investment, which of course in a contracted environment, plus we're so close to everything had been locked down just a few months ago that I don't think that this has really picked up any steam yet from an industrial investment perspective. But also there's really no need to, as consumption is slowing globally, so probably not the best time to be investing. But the other piece of it is that the property sector is also weak. Home sales have been edging down, price growth has been cooling, and so new housing starts continue to drop in the economy. So you're seeing a slowdown on both the industrial and personal side. And so this was an older article. It came out at the end of May. And so, they were projecting that there would be a rate decline coming the following week, which I did talk about at the first part of this video. And so, they say what's next for China's economy. They're set to announce June's rates, and they did come down. And so, the article here did expect more easing measures in the coming months. And so we'll see how this plays out. We'll see what they do. I think the voucher system is really good. At the end of the day, when it comes to making decisions on capital, I think people make the best decisions. I don't think a centrally planned investment program, like an infrastructure program, is the right move. I think vouchers are really good. I think tax breaks are really good, and it'll put the money where it's most needed. And so let's see how this plays out. Ultimately, when it comes to my investment in Alibaba, I still think the company's very strong. They're operating very strong. I think that there's going to be some value created with this breakup that they're going through, but they do need to provide us with more information. Now, if you guys want to know what I think about Alibaba as a whole, you can get access to the tracker, and in the tracker you can see my model for Alibaba, but also the tracker has all sorts of other names as part of it as well. And you can get access to the whole thing at the lower tier of the Patreon. I do believe that it's the best value on YouTube, because essentially what you're doing is just buying me a coffee or two for all the work that I've been doing over the past couple of years and building up this tracker. And the other thing that I did want to mention to you guys is that, I did put out a 4-part series discussing the risks of the Chinese real estate sector. And some of you may not have seen that. I think it's some of the best work that I've done on this channel. And so if you want access to the 4-part series, I've made it available for free on YouTube, and you can link into it right here.